evening, everyone, and welcome to Startup Central right here on ET Now. This is the first and only daily show in India that's dedicated to startups and entrepreneurship. I'm Avan Dabash. Well, today we've got lots lined up on the show today, but our main focus is going to be the Barclays report on the Indian e-commerce market. Now, in what signals an intense war in the e-commerce space, Amazon has overtaken Flipkart in the GMV sales for the first time. The Barclays report says that Amazon has generated sales of $7.5 billion as compared to $6.2 billion of Flipkart. My colleague Rahul Dayama joins in to decode the numbers for us. Rahul, the GMV sales suggest that Amazon is leading, but revenues still show that Flipkart has an edge. Why is the report still optimistic about Amazon India?
Avan, the finer details is really between the numbers. So if you were to look at pure play GMV numbers or gross sales that, include all sort of discounts, no product returns, the entire sale that has sort of happened, Amazon is ahead for the first time. But we have to note that the numbers do not include Myntra and Jabong. So if you were to include Myntra and Jabong, also Amazon and Flipkart will be neck to neck in that sense. But why is it a worry sign for Amazon? Because the report goes on to say that in revenues, for now, Flipkart is ahead, but the pace of revenues for Amazon is growing at a faster pace, 82% versus 47% for Flipkart. In fact, the estimates for gross sale also indicate that Amazon will continue to be ahead in the game compared to what Flipkart is. What's really driving this trend? Remember, this may come as a surprise because these numbers are for the last year, FY18, but FY19 also Amazon has been given an edge because during the festive sale, we saw Flipkart CEO tell us in clear terms that they have over 75% market share. There's no clear number two player in India. Competition is irrelevant, but that seems like is not really the case. What has really drove this growth for Amazon has largely been Prime subscriptions, which Amazon has agreed is one of the fastest selling product. That has helped. For Flipkart, still it is the wholesale side of the business that is performing better. Coming to what the players have to say on this entire thing, Amazon saying they will not comment on particular reports. That's the stand they've maintained for a long time now, but they continue to be the most visited site in India. Flipkart refuting the report, saying we still are the undisputed leader. But seems like the battle is far from over. It's still early days for e-commerce, and we do have some guests joining in who will decode really on the trends that will stand out.
All right, thanks for breaking it down for us, giving us a sense of what the numbers have been, as well as why we're not looking at it overall being neck to neck with respect to Myntra's numbers not being included. But why don't we take this discussion forward? Harminder Sahani of Wazir Advisors is with us. We also have joining in K. Vaitheswaran, founder at indiaplaza.com. Well, great to have you both on board. I'm going to start off with you, Mr. Vaitheswaran. So we've always discussed the war between Amazon and Flipkart. It's been ongoing. But now with Walmart in the picture, do you think that, it's the competition within the space is going to get more aggressive? And how would have you as well read into the kind of data that we've seen in the Barclays report?
Yeah, first of all, I think one of the big challenges in decoding any of the data in the e-commerce industry in India is that all the numbers are private. Nobody really knows what the real numbers are, and we are forced to read reports like this and arrive at our own conclusions. The other problem is a lot of this data is actually based on gross merchandise value, which I've always believed is really an irrelevant number because it just shows the MRP value of the, say, goods that have been sold, gross of returns, and that really doesn't indicate the performance of an e-commerce site. I think the key number to look at is, are margins positive and the margins growing, but really nobody shares that number. So in that sense, we still don't know. None of us know. Where I would really look at is, I use a very different metric to track. It's not reliable from a data point of view, but I find it actually quite representative of reality. Over the last few years, the simple thing that I do is when I go to a corporate or when I go to a large building, an apartment complex, at the entrance, you see large number of packages of either Amazon or Flipkart kept there for deliveries. And over the last 2-3 years, consistently, the number of packages that I see of Amazon is far higher than what Flipkart is. Even in the place that I stay and the places that I regularly visit, I see more people daily coming in delivering on behalf of Amazon than on Flipkart. So I think it's a reasonably safe assumption to make that certainly Amazon has now gone ahead. And I'm not surprised at all. As far as the revenue numbers are concerned, that indicates perhaps that, and if those numbers are true, because we really don't know whether the numbers are true, but assuming they are, perhaps Amazon has some pressure on gross margin because revenue is net what remains with you, and that's an essentially a metric that's an outcome of the gross margins that they make out of the gross merchandise value, and perhaps Amazon is under pressure. But going by the fact that more people are now visiting Amazon, shopping at Amazon, more packets of Amazon are being delivered, I think it's a passing phase. Sooner or later, I would suspect that even the margin numbers, Amazon would be far ahead. That would be my reading. And I'm not surprised at all because at the end of the day, customers in India vote going by their user experience. And the user experience in Amazon, if anything, has got more and more reliable. In fact, the word that I associate with Amazon, and I've mentioned this several times in my book, is I find Amazon to be increasingly a very boring site. Right. And I say this in a very complimentary sense because they're so boring. You order on Amazon, they deliver. I mean, that reliability, that boring reliability is something that customers will keep voting for. And I think that's a big edge for them going forward.
Okay, so you're not at all surprised with this kind of a win. Let's get you in, Mr. Harminder Sani, as well. Do you concur with the thoughts from the panelists talking about how it's no surprise that Amazon has for the first time performed better? What do you think are the key metrics that have worked for them?
Yeah, I fully agree with what he was saying because in the absence of the true data and different conflicting reports coming in and the claims being made by the company, one has to depend on one's personal observations, and similar observations made by me also tells me that Amazon, in most of the cases, is ahead of Flipkart. And even if it's not ahead, I have always been arguing that how can Amazon be lesser than Flipkart? Because people say they sell more electronics, they sell more mobiles, which is high ticket items. That's why their gross merchandise value is much higher. So given all of that, but one thing which I think in case of Amazon, I have always maintained they have 25 to 30 years of experience of being in one of the most competitive markets in the world and being successful. Also, they have experience of having been beaten very badly by Alibaba in China. So these two experiences of a huge success and a huge failure, that's what they bring to Indian market. And I think they're putting all their experience to play, that how they need to understand the market better, how they need to give consumer what they deserve and delight the consumer every single day. How much do they need to invest into their brand building, and what media works in India, what kind of endorsements work in India. So I think they've done a fantastic job on that. Not that Flipkart has not, but Flipkart at the end of it was an upstart company, still is a very young company as compared to Amazon Global, and all those experiences and learning which Amazon has, they have to compete against that. So that's the edge which Amazon has as of now. And now with Walmart coming in, I'm sure it will become level going forward. But till now, what the numbers are coming at, they are the Flipkart run by the founders and the company which was created in India. So I think they were up against a very, very significant competition. And till date, even if they have remained neck to neck, I think compliments to them. But going forward, it's going to be very different.
They have remained neck to neck so far. This is the first time that we're seeing Amazon overtake. But nonetheless, let's get right back to what's really worked, what really hasn't worked for Flipkart. And Mr. Veteswaran, do you think that, an over-dependence maybe on the smartphone sales was something that, pulled them back to a certain extent? What's your take?
Yes, so, I think Flipkart right from the beginning has been focusing on the smartphone category because I think they've been chasing the wrong metric. Gross merchandise value is a completely wrong metric, an irrelevant metric to chase in the e-commerce. But unfortunately, Flipkart went down the GMV path right from the beginning. And smartphones, in that sense, simply because of unit values being higher, they went and chased gross merchandise value through selling smartphones. Now, the problem with the smartphone category is essentially the most popular smartphone, let's say at the beginning of the year, 6 months later, may not even be available. Models change very quickly, brands get overtaken very quickly. So it's impossible to build a long-term strength in that category. And it is purely price driven, it is purely driven by the latest model, high features, low price available. So, I think they chased a category where it's very hard to build customer loyalty. So that's what that happened. And many of the category, one of the things that drove their early smartphone sales was the exclusive deals that they did with several brands. That has changed. Amazon is now selling most of these brands. And in recent times, if you look at OnePlus 3 or OnePlus 6, OnePlus T, all of those, they become an extremely popular brand in India now. I think they're exclusive with Amazon. Many of the brands who were exclusive on Flipkart are now selling on Amazon as well. So what has really happened is a lot of customers have actually shifted away.
With what Mr. Vaideswaran was saying, I wonder if you concur with what Mr. Vaideswaran was saying, that the metric of GMV, since it's largely been disputed, should we even look at that as a metric? Don't you think the revenues reflect the clearer picture?
Definitely they do, but if Flipkart was a public listed company and I was wanting to buy shares in that company, then definitely I'll worry about that. But as long as Flipkart was concerned, their investors, their founders, and eventually the company who bought them over, Walmart is the largest retailer in the world, and they have written a significant amount on the check. So I think they all agreed on that. The GMV is a good enough metrics to go with as far as the three entities, the founders, the companies who were funding it, and the buyer who bought it all eventually. So they all agreed to that. So I think that's fine. But from a sensible business point of view, obviously at the end of it, it is the EBITDA margin which you are making, return on capital employed which you are making. I think going forward, that's what will be looked at. That's why I said that going forward, it's going to be a very, very different game, because we are talking largest online retailer from America, largest offline retailer in the world. They are going to be competing in the form of Flipkart and Amazon. And both of them are highly seasoned players. They are not going to be wasting even a single dollar, because it is not investors' money, it is their company's money, and there are people who are building business. So I think a lot of these things will change, and we will be talking about very different numbers. But till the time Flipkart continue to raise money, I think the founders and the investors as well as the buyer of the company, they all agreed to GMB, and I would say good for them.
It's been an interesting discussion. Many thanks for joining in, gentlemen, on Startup Central and giving us your views on the war between the two key players, that's Amazon and Flipkart. On that note, let's take a quick break right here on the show. But on the other side, Freecharge's Kunal Shah is back. We get in some views from him with my colleague Rahul Dayama. Welcome back. This is Startup Central. Now, he's one of the most high-profile entrepreneurs of India. After selling his first venture, Freecharge, for $400 million, Kunal Shah is back with a new startup. His startup, Cred, wants to reward credit card users with a host of offers for paying their bills on time. How did the idea come along? What does he plan to do differently this time? Rahul Dayama caught up with him for this engaging chat. Listen in.
Any country that has more trust in the system has more prosperity. That is something that I've observed across multiple things. And to create more trust, you need to reward the people who are more trustworthy. It's very simple. And trustworthiness is simple. We have to take the financial trustworthiness. We cannot take all sorts of trustworthiness and angle, because in a more objective measure to do that. Our idea was very simple. Can we create a community where we reward the people with good financial behavior or good credit score? And we are doing a simple process where we are saying Cred is a platform where you can, it's a members only platform where you can come with a high credit score. And initially what we are doing is three things. You can manage your credit cards. We can help you detect hidden charges, suspicious charges in the card, which can be hidden. They don't come in SMS to you. So you need to track that. And what we are doing most importantly is rewarding people for paying their bills, right?
How did this idea sort of come by, where you're traveling a lot and you realized, because credit card by the scope of it itself, about 40 million customers, RBI says. So you felt that Indians are not as much aware about it?
Actually, we did a bunch of research. We've been researching for, I would say, close to 5 to 6 months starting January. And we tried with multiple ideas from healthcare, education, all of that. And when we were talking to users, we discovered that even the top rankers, we spoke to, let's say, rank number 5, 6 in CA and asked them about credit card usage. And we found out that she did not know that if you don't pay more than minimum due, you charge interest rate or whatever. Now, this is a CA, top not CA, and these are young people who are just coming on to, and we are the first generation, honestly, who got a credit card, who got a home loan, who got a car loan. So we have not been trained by anybody else to understand, and financial behavior is something is private. We don't discuss this openly. So you need a platform that helps these people. So the idea was very simple. We researched multiple ideas. We discovered this is a big gap, and we saw everywhere in the world. And in India, it was almost like a flat rate for everything.
Got it. But, do you expect things to change with credit score? India will still take a lot of time, right, for the US way of things in terms of how your interest rates impacted. Here, apart from your basic loan approval, credit score does not really matter in that sense.
That's a good question. Honestly, I don't think it's a function of the system, but the players of the system. Let me give you an example. When we went to a car rental company and told them that we are going to have people with high credit score coming to our platform, we want you to not charge deposit to our customers when they rent a car. They were very happy to give that to us. Now, think about this. If we can create such kind of systems where you can scale and make things rewarding for them, then you will care about your credit score.
Kunal, do you agree that there's a lot more pressure on you after, the Freecharge exit, so to say? It was one of the biggest deals at that time. Still sort of now put it at number 3 internet deal that we have seen in the recent past. Is that pressure as an entrepreneur to sort of also perform and ensure the second innings really pays off?
It is quite interesting. We've received a lot of love on social media in the last few days. It's been day 4 of the company technically, but the thing is that you're expected to be like a stable company, like a 3-year-old company. There are good sides to it. People trust you and do a lot of things with your new startup, but it comes with a lot of expectation and pressure. Most of my team has not slept in last 4 days just to make sure that we create a superior experience for our customers.
So much churn that we have seen, be it in the space of e-commerce, we have seen players thrive and not exist now. We've seen Walmart, one of the biggest deals. So would you agree that the scale and scope of things for the Indian market will continue to be robust, or will the fight really come down to 1 or 2 players really?
I think India is in a very unique market right now where all the global players are here to capture the market. Also, Indian players are trying to capture the market and all the investors are here. I think this is a last big market that is left to be captured and claimed. And therefore, it creates a very unique market dynamic that everybody is going to actively participate in. And we are going to see a very, very interesting thing where new and new innovations will keep coming, right? Honestly, if you think about Cred as a product, there is no such thing that exists anywhere in the world. So I think the opportunity for Indian entrepreneurs to come up with original ideas that are relevant for this country, because the global players are less likely to do that.
Do you think that Indian entrepreneurs will also hold their ground as we move ahead in the next 5-10 years, that we will have those big internet companies come out of India also? For entrepreneurs watching this, what is it that you would want to tell them, not only from your Freecharge experience, but last 2-3 years that you're working with entrepreneurs and with this new startup, 1 or 2 big takeaways that you would want them to really take from
I would say that the India journey is just starting now, honestly, and we are at, I would say, V0 of this. We have at $2,000 per capita income right now, which are going to just take off from here. China is at 10 plus. We are going to get into a zone where wealth is just going to come, and this is a perfect time to do stuff. We have been fortunate with the infrastructure being there, internet, smartphone penetration, payments penetration, UPI, Aadhaar. The playground has been set, and if anybody believes that the market is over, I think it's just getting started.
It's just getting started. There you have it, a freewheeling chat with Kunal Shah. But on that note, that's all the time we have. Thanks so much for watching.